Vivek Rajpal, the rate strategist at Nomura India, who joins us for a quick check on that. Hi, Vivek. Thanks so much for joining in this morning here in India. Post yesterday's RBI policy, could you tell us, would you recommend staying long with bond positions, and what's your total analysis of that?
Yes, definitely. I would recommend staying with long bond positions. I think in this whole of rate cut cycle, it's really the bonds haven't really performed, and we are just beginning with the bond rally. Though in the near term, we should expect probably a 20 basis point of a rally, but long bond positions remain quite attractive from a medium term perspective.
Okay, so give us the near term as well as the medium term trajectory on the bonds.
So, first of all, broadly, one needs to understand the dynamics that are in play. I think there are two factors which are very beneficial for the bond markets. One is the fiscal consolidation which government is undertaking, and which effectively means that in terms of a net bond supply, we will see a flat net bond supply on year-over-year terms from here on. And number two, the increase in FPI bond limits is something which is creating a new investor class in the bond market. So for example, on a rough calculation, FPIs will absorb approximately 10 to 11% of the incremental net supply. With credit still sluggish in the economy, I think the supply-demand equation is getting favorable for the bond markets, and we should continue to expect rally in the bond markets.
Any levels?
So near-term level for me is 740 on 10-year benchmark, but there are clear downside risks to that level from a medium-term perspective.
All right, Vivek, we can revisit the bond outlook then. But what about the rupee? I mean, would you recommend going long on the rupee at these levels? Do you expect the rupee to be a bit of an outperformer from the emerging basket at least?
Yes, we believe rupee will be an outperformer. Reason is that the current emerging market crisis has a lot to do with the commodity prices, and I think there is a differentiation that is occurring in the markets between commodity exporters versus commodity importers.
Right.
So India being a commodity importer and the fundamentals improving, one should expect INR outperformance, at least relative to its EMPS.
All right, Vivek, so then could we see the rupee at around 65, sub-65 levels, or do you think, in fact, dollar buying is too strong and maybe at around 65 rupees, 65 odd, it's fairly valued?
No, so it depends on the broad dollar environment as well, how the global EM sentiment pans out. But relative outperformance is something which I would still expect.
What's the Nomura view on rate cuts from here on? Because the RBI governor indicated that he's front-loaded it, and he's given an inflation target of 4.8% for to Jan 2017. So with that in mind, when do you expect the next rate cut to be?
So we do not expect any further rate cuts. The policy rate is at 6.75, and we expect RBI to remain on hold for a foreseeable future. But that doesn't mean that the bond markets cannot rally. In fact, now the rally will be a compression between bond yields and the policy rate.
Okay. The RBI also yesterday permitted the issue of these overseas rupee-denominated bonds with a minimum maturity of 5 years. Will this be lapped up as an additional source of funding? Walk us through the pros and cons of this.
It definitely gives an opportunity for the investors. I think I see the positive aspect of this announcement. I think the new investor class should be welcomed in the country, and that's what we are seeing.
All right, Vivek, we'll leave it at that. Thanks so much for joining in. So that's